Hi everyone, I'm Adam Lyness. So among other things, I have a stake in Cryptopia and I work with the team there on business development. There we go. So I'm going to share some of my thoughts on the future of blockchain in the fintech space. So these don't necessarily represent policy for Cryptopia, but I can say the team's working hard to be on top of these because we're trying to grow a strong, sustainable business in this place. So I guess most of you are aware that Cryptopia is a cryptocurrency exchange, probably one of the larger Australasian blockchain businesses. And just to give a bit of context to begin with, I'm going to share some of my journey with Cryptopia. So sometime really at the start of last year, so I guess that's really early in the blockchain space, one of the Cryptopia founders, Adam Clark, was working with us on our consulting business. Working with Rob, the other co-founder on Cryptopia, mostly working in the evenings, really trying to make that platform grow. So we knew about it. We thought it was really cool what they were trying to do. There was this really nice sort of counterculture vibe about it. And one thing we're observing is they seem to keep getting busier. So, Adam was like, I need to take some time off to work on this. And eventually, it was starting to get to the point where he's looking at having to wind down his other interests and focus on Cryptopia. So we were smart enough to say, okay, maybe there's an opportunity here. So we said, look, guys, you're growing really fast. We offered to come on board and to help grow the business. So that was in about March, April last year. So one of the first things we did was to try and educate ourselves. We headed up to the Blockchain NZ conference in May last year. Still really getting our heads around things, so maybe that naivety helped us out a bit. Because I remember one of the speakers standing up then, and they said that New Zealand really needs a tokenized version of the New Zealand dollar, tokenized fiat. So I remember we had this conversation. We said, Adam, Rob, how quickly could we actually do this? And they said, well, if you really wanted to, you could actually do that overnight. So that's what we did. We stayed up all night. We created the NZDT, New Zealand Dollar Token. We created a base market on Cryptopia. Then we printed out a bunch of vouchers, just giving away $10 and chucked them on all the delegate tables. Most of which got hoovered up by all the students before anyone else saw them. But, it worked. So a bit of a publicity stunt, yet out of this publicity stunt, literally within a few months, it became the main way that New Zealanders actually bought and sold cryptocurrency. When we started to head towards that peak period, it was trading over $1 million a day. There we go, there's the NZDT. So I do have to add a footnote to that. With about 5 months after that, our bank pulled the plug on the service because they weren't quite there yet with the technology. I guess we were simply moving faster than they were comfortable with. Another footnote to that, I am pleased to report that we have been building our banking relationships since then, and we're not actually far off relaunching another tokenized New Zealand dollar. Anyhow, back to the Cryptopia business. We were expecting to come in, help Cryptopia and Adam and Rob out a bit with a bit of part-time management resource, a few developers. And what actually happened was probably the fastest growth the New Zealand tech company's ever been through. So, 2 to 100 staff in under a year. We've got 2.3 million registered users as of about a month ago. At its peak in that crazy December-January period, our trade volume was sitting over 250 million a day. So to give some context, I think the NZX was doing about half that at the time. We had 100,000 new sign-ups in one day before we had to pause registrations, and I think the site traffic was higher than what TradeMe was doing. So of course all this put massive pressure. We had about 50,000 support queries in the backlog at one point, and big challenges on all fronts. But we got through it, and you have to give credit to Adam and Rob. These guys, built a startup that grew this fast and actually managed to scale by that amount, which is kind of incredible. Now, of course, this massive growth was on the back of this euphoric cryptocurrency speculation, right, in December and January. It was a crazy time. It was bringing you plenty of fortune seekers and plenty of opportunists into that space as well. And, and sad to say, this was most people's introduction to blockchain technology. If we look, I guess, before that big rush, pre-mid-2017, the crypto industry was fairly small, right? It was regarded, I think, very much as play money and wasn't on the regulatory radar. But that started to change in a big way. And it left regulators struggling to catch up, as well as highlighting issues as the rules as they stand really not being fit for purpose. And I think Alex Sims is certainly working to address some of that in her research. So as a global top 5 altcoin exchange, we saw a huge number of these ICOs coming through and appearing. Most of them were of extremely dubious investment quality, but surrounded often by really entertaining hype. So the technology was doing a great job of democratizing speculation. And what that meant, I guess, was you had a lot of new investors, a lot of interest in the space, but it was unregulated. I think a shark-infested snake pit would be a fair way of actually describing it at the time. So yeah, a few examples on some sentiment there. This is Pickle Rick's. Believe it or not, it was actually a test. It was a test token our engineers created, just to check on some software enhancements. But bizarrely, that didn't stop people speculating on it almost immediately, showing that at this time people were getting stuck into anything. I had a young friend. He came to me and he said, "Oh, Adam, you work for Cryptopia, don't you?" And I said, yes, I'm involved with Cryptopia. And he said, "Oh, good, because my friends are going to Thailand and I've got $500. I can't really go with them, and I've got to turn that into $1,500 really, really quickly." So I said, oh yeah. So you want some advice on how to turn $500 into $1,500 really quick? And he's like, yeah. What should I do? So I got him to build me a fence. That's it. They did a really nice job, but that I felt was the safest way in a week to earn $1,000. And I think he did make it to Thailand. But the example serves to highlight sort of back then just it had become really mainstream, this speculative behaviour, and some of it was risky, right? Not everyone could afford to lose that money. So I guess we can't lose sight of the fact that these crypto markets, they're based on new disruptive tech. It's going to take time to stabilise and mature. Until then, it's a high risk and potentially high return space. So I guess since that craziness in that December through March period, we've come down the other side of the hype cycle, and that started to free us up to start asking questions about what next. How do we build a sustainable, ethical business in the blockchain space? So I guess I'll come now, open it up maybe to a broader context, right? And start talking about some of my predictions for blockchain. Starting with where I think we are now. So I guess the first thing, and this point's been made by other speakers, blockchain, or more broadly distributed ledger technology, DLT, it's not crypto. So cryptocurrencies and ICOs, if we're completely honest, are mostly distracting hype in this space. But the low cost of capital there, the speculation, it's distorted the normal growth cycle for a new technology like blockchain. I think most ICOs are going to fail, even with that huge pool of investment capital they received, generally because they don't have validated business cases. Building a startup is hard slog, and generally giving some random founder millions of dollars before they've actually built anything is going to be a really, really bad idea. So ICO hype, it's fueled investment in decentralized trustless models, I think perhaps more at the expense of more pragmatic or hybrid models. And it's, I think, in more conventional blockchain-based financial services, these have missed out because they don't tend to necessarily loan themselves very well to tokenization through ICOs. Having said all that, I think Bitcoin, Ethereum, and Ripple, some of these other major digital currencies, they're really now an established asset class like gold, and they're going to be around for a long time. So, some of the predictions. Blockchain's not a fad; it's not going away, and I think it is going to be disruptive, particularly to the fintech industry. But it may take 5 to 10 years. I think we're going to inevitably see consolidation in the industry. So the number of exchanges, coins, protocols, it's going to shrink. And I guess there's a quote, without creative destruction, you can't have capitalism. It's a natural process. I think we're going to see the blockchain investment shift more away from these fully decentralized, trustless ecosystems, maybe to more hybrid business models. We're talking these permission nodes and a heavier focus on compliance. Of course, with some crossover between chains, and there's no reason why you can't have a permission network also writing hashes and so on to a decentralized one. We're going to see this growth of permission consortium-based blockchains to meet the needs of different industry sectors. With interoperability and standards driving efficiencies there and economies of scale. I think a key enabler that we're going to need to be in place to do that is tokenized fiat. It's going to be essential, especially for financial services growth in blockchain. 90% of the market, it wants to transact using fiat currencies. Cryptocurrencies, right now at least, they're just too volatile. They're not established enough. There's not the liquidity. There's not the history and the trust. If we can do that, then I think given 5 to 10 years, we're going to see most of our financial markets are going to use DLT technology, and they're going to become globally accessible. So that means that compliance rules are going to have to adapt and converge over the time and become more globalized themselves. One of the other key things in here to make all this work, of course, is we need to start standardizing how we manage identity in the blockchain. So some of these sovereign identity projects are going to be really important. And I can't emphasize enough, I guess, that we're still really in the early days. Most of the real value from blockchain, it's going to take 5 to 10 years to realize. Okay, a little bit more detail. There we go. Talking about, why is blockchain and DLT going to be so disruptive? Well, ultimately, all financial markets and transactions are just ledgers. So they're rearrangements of who owns what, where what can be represented in digital form. So DLT is a really efficient way to maintain ledgers. If you combine this with cryptographic techniques, allowing any digital asset to safely change hands using the public internet, the impact starts to be quite profound. So when we combine DLT with cryptography, we're able to democratize fintech. So we're in a position where anyone can build financial services on the interweb, greatly reduce compliance on incumbent services. You don't really need your banks, you don't need your credit card companies and so on. And I think collectively this adds up to being disruptive. Although we still need to create great business models, right? We've got to build the products. We need a whole bunch of software. We need to work together and integrate and standardize some of the ways things actually transact. So, blockchain's important here, but it's an underlying technology. It's really just an enabler. So, yeah. Predictions. Take it as a given that we're going to see industry consolidation. Most shitcoins are going to disappear, and most ICO projects are going to fail. So it's normal for a new industry, but I think in this place, in the crypto space, the effect's really going to be exaggerated here because that hype cycle was particularly strong. Of course, within that, you're going to see some of the future ICO projects, they are going to prove to be good investments. So you've got to take each one on its merits. As I covered before, I do think you will see the Bitcoin and some of the major pure currencies remaining as major asset classes. The value of ICOs is going to eventually start to reflect their actual return on investment. So anyone wanting to raise money from now on needs a much stronger business case. So not just, just basic stuff like knowing who is our customer, what problem are we solving for them. We might even start to see boring traditional stuff like market validation and businesses not receiving huge amounts of investment when they have zero product and zero revenue. So over time, I think if we go into the protocol space, we're going to see some winners emerge for underlying core blockchain tech. Maybe 6 to 10 protocols with different strengths, things like transaction speed, the consensus mechanisms, their suitability for fully decentralized or maybe more hybrid ecosystems. I think industry-based consortiums are going to adopt these core protocols and build on them to suit their needs. So, for instance, the needs of the travel industry may be somewhat different from supply chain management and so on. So there's plenty of protocols attempting to find niches in this space. We're seeing IBM's Hyperledger would be one, Centrality's building their plug technology, which is another, and we're looking at using that for some of our projects. So DLT tech allows open protocols to flourish. And as winners start to emerge, I think we'll see increased efficiencies from interoperability, adoption of standards. So you can start to think this concept of maybe open banking, but in the truest sense. And once transactions can happen efficiently both within and across industries, we'll see an exponential increase in the value that we can actually realize from DLT tech. And so sorry to say, when some clear winners emerge, the banks are still going to be around. Banks and conventional institutions are going to buy blockchain companies. They've got huge pools of capital and they've got a vested interest in the new landscape. And I think this is further going to drive the industry towards maybe a more centralized, compliance-based approach, albeit far more open and competitive than banking as it stands today. coming back to this shift from more decentralized models, I think we'll see a clear split in the blockchain industry activity, with purists going down that fully decentralized route, while the people who actually want to make some money are going to take a more pragmatic approach. So I think we'll see consortium-based approaches, permission nodes, consensus mechanisms, and of course, in the space, users are still going to get most of the benefits. They'll still be protected by many points of failure. There will still be common ledgers that multiple parties can rely on to have reliable information, and protected, from single points of failure. They'll benefit from open protocols, and ultimately, if the regulation's right, they'll benefit from some regulation in the space. I think there's always going to be a market, maybe for 10% of fully decentralized services, and particularly in countries that are suffering economic mismanagement. So it's not really a case of either or. I think, each direction, each approach will help drive growth in the other one, and vice versa. Other things driving this shift away from this decentralized, trustless ecosystems. I think first, major industries and the majority of users want to deal in fiat. So the New Zealand dollar, the US dollar, and so on. Highly volatile cryptocurrencies, they tend to be a pain in the butt if you're trying to actually transact, because they change value so quickly, and trying to manage those risks actually becomes quite tricky. So I think you're going to start to see central banks eventually start issuing fiat tokens in the blockchain, and at that point, it's going to go truly mainstream. And of course, fiat, it does necessitate some degree of centralization, as the value is dependent on both governments and central bank activity. You can't really protect against massive quantitative easing. Of course, you're going to need interfaces with the conventional banking system, and these interface points can always be regulated, just like the majority of cryptocurrency exchanges now. I guess another key thing that, to me, I think is pushing away from fully decentralized approaches is that you just can't find a model to make it work for every financial market or service. A decentralized protocol, it can't make a legally binding contract or be held accountable in the event something goes wrong. A protocol can't appoint a debt recovery agency to repossess my car if I don't keep up with repayments. At some point, you do need legal entities to conduct business. And having someone to blame, let's be honest, it can be useful. Just ask Cryptopia's clients when something goes wrong with their coin, right? They really like being able to complain to us. So, I think we talk about identity and privacy with a lot of these decentralized networks, but I'm not sure there's really necessarily a fundamental right for people to be able to transact anonymously. And I think most of the market actually doesn't care. In many ways, they're happy to provide their identity to trusted parties for the protection and the oversight it gives, as well as the downsides. And if we're quite honest, if we're looking at some of the large growth areas in financial markets and so on, I just don't think regulators are going to allow major financial markets to operate without identity and traceability and some degree of sort of central regulation as core features. So, fiat markets on the blockchain. Once we see fiat issued in the blockchain and appropriate identity and compliance processes in place, it is going to be possible to build these major financial markets. So, imagine if it cost only $200K to list a company and offer your shares to a global audience rather than the current 2 to 10 million. I think we'll see all sorts of financial services, instruments and derivatives being created. In many cases, these are going to provide genuine economic efficiencies. I think if we get this right, then we can start to look at major industries like insurance. They're ripe for disruption with DLT tech once we have some of the solid fabric in place. And at the end of the day, it's all about economic growth. So, DLT blockchain technology, it's a back-end tech, but they can lead under a lot of estimates for 3 to 7% global economic growth. So Cryptopia is aiming to help make New Zealand a global hub in this space. So how do we make it happen? Well, we need credible fiat token technology to enable existing markets and industries to operate on the blockchain. Let's build real businesses using DLT and stop chasing easy money from ICOs and new tokens that just don't make sense. It's back to basics for startups. Who's our customer? What problem are we solving? Maybe traditional funding mechanisms. I think as an industry, we have to work together to develop foundation protocols and industry-led consortiums. Now, we've got to build interoperability and get industry standards going. When you do that, you start to get economies of scale. The economic potential starts to be realized. I think we need to build financial services, in particular, that leverage blockchain tech. New globalized markets for any kind of financial instrument or digital asset. So all the existing ones, and probably many that we haven't even thought of yet, because it's going to become a lot easier to create them. And if you get all this right, eventually you can sell out to the man. Only if you want. So banks and established incumbents are going to hoover up blockchain businesses and adopt the tech. And when that happens, we'll know as an industry that we've really won. So that's really it from me. At Cryptopia, of course, we've got a lot of proven, hardened infrastructure. We're building support for high-frequency trading, 2.3 million users in an addressable market. And we're really working hard to develop best practice compliance processes, banking and regulatory relationships. So yeah, there's a need for cool business heads, industry collaboration to make all of this happen. So we're very open to opportunities and partnerships. So please do come and approach us and talk to us anytime you like. Thank you.